Do you understand why Bitcoin always feels obvious after it moves, but impossible to hold before it does? Because there's a Bitcoin cycle nobody talks about. No charts, no indicators, no YouTube thumbnails screaming targets. Yet everyone lives through it, every single time. This isn't the 4-year halving cycle you already know. This is the human cycle, the psychological loop that decides who actually wins. Let's decode it. Here's the explanation behind the Bitcoin cycle nobody talks about, but everyone lives through. 1. The invisible phase, when nothing happens. This is where the cycle really starts. Not with a pump, not with a crash, with boredom. Bitcoin is flat. Volume is dead. Your favorite crypto influencers stop posting daily price predictions. Group chats go quiet. You open the chart, nothing. Zoom out, still nothing. This is the phase where Bitcoin feels broken. And that's the first trap. Because this is when infrastructure is quietly being built. Mining difficulty adjusts. Hash rate creeps higher. Developers keep shipping updates no one tweets about. Institutions file paperwork instead of headlines. This phase never feels bullish. It feels pointless. And psychologically, this is where most people leave. You tell yourself, I'll come back when something happens. I'll buy when momentum returns. I'll wait for confirmation. But here's the truth nobody likes hearing. If it feels boring, if it feels obvious that nothing will happen, that's usually when the real cycle is being set up. Every major Bitcoin move in history started during this phase. 2012, 2013, 2014, 2015. Same feeling, same boredom, same disbelief. This phase filters people out quietly. No pain, no drama, just distraction. And once you're gone, the cycle moves on without you. 2. The doubt phase, when good news feels wrong. This is where things get uncomfortable. Bitcoin starts to move, slowly, not enough to excite you, just enough to confuse you. A few green weeks, a breakout that doesn't go viral, positive headlines that feel forced. You don't trust it, because last time hurt. You remember the drawdown, the crash, the panic, the moment you swore you'd never get emotionally attached again. So when Bitcoin starts creeping up, your brain rejects it. This is a dead cat bounce. This is just another fake breakout. Macro still looks bad. Rates are still high. Regulation is coming. And here's the wild part. During this phase, most of the news actually improves. ETF conversations, institutional custody solutions, countries clarifying regulation, Layer 2 adoption growing quietly, on-chain metrics turning healthy, but emotionally, none of it lands. Why? Because pain rewires perception. After a long bear market, your brain is trained to see upside as danger. So instead of buying, you hesitate. Instead of accumulating, you wait. Instead of learning, you scroll. This phase feels rational, responsible, careful. But historically, this is where long-term winners quietly build positions. Not because they're fearless, but because they understand something simple. Bitcoin doesn't wait for consensus. It moves when belief is lowest. 3. The re-entry phase, when everyone comes back late. This is the most human part of the cycle. Bitcoin breaks a level, not just technically, psychologically. Old highs start to matter again. Twitter wakes up. YouTube titles shift tone. Thumbnails turn green. Suddenly, everyone's watching closely. Your friends ask, "Are you still into crypto? Do you think it's too late? Should I buy some Bitcoin?" And you feel something dangerous. Relief. Because now it feels allowed. The fear of being early disappears. The fear of missing out replaces it. This is when people re-enter emotionally, not logically. They don't buy because they understand Bitcoin. They buy because others are buying. This phase is loud. Price targets return. Cycle theories flood your feed. Everyone suddenly becomes a macro expert, and Bitcoin rewards them at first. That's the cruel elegance of this cycle. Bitcoin always lets late buyers feel smart for a while, just enough to lock them in emotionally, just enough to make selling feel impossible later. 4. The euphoria phase, when the narrative becomes dangerous. This is the phase everyone remembers. Bitcoin is everywhere. News anchors mispronounce it again. Celebrities talk about it casually. Your barber has a portfolio. Every dip gets bought instantly. Every pullback is healthy. Every correction is needed. And the story changes. Bitcoin is no longer an experiment. It's inevitable. It's unstoppable. It's different this time. You stop hearing about risk. You stop hearing about volatility. You stop hearing about downside. Instead, you hear supercycle, hyper-Bitcoinization, $1 million per coin. And emotionally, this phase feels incredible. Your conviction peaks, your caution disappears, your identity merges with your position. Selling feels betrayal. Taking profit feels stupid. Skeptics feel ignorant. And this is when the cycle quietly flips, not because of bad news, but because expectations become fragile. Bitcoin doesn't crash because people are bullish. It crashes when everyone's positioned the same way. And that's exactly what happens here. 5. The shock phase, when reality returns instantly. This phase is fast, violent, confusing. One red day becomes 3, then 5, then 10. Explanations scramble to catch up. Market manipulation, whales shaking out weak hands, a black swan event. But the truth is simpler. The cycle has already completed emotionally. Everyone who wanted to buy already did. Everyone who was optimistic is fully invested. There's no new marginal buyer left, and price reflects that brutally. This phase doesn't ask permission. It doesn't wait for logic. It just resets. And here's the hardest part. The same people who felt smartest weeks ago now feel foolish. Not because Bitcoin failed, but because they misunderstood the cycle they were living inside. 6. The exit phase, when conviction quietly dies. This phase doesn't trend on Twitter. It happens slowly. People stop checking prices. They stop defending Bitcoin in comments. They stop watching crypto content. Not out of anger, out of exhaustion. You tell yourself, I'll come back later. I still believe long term. I just need a break. And slowly, you disconnect. This phase looks different for everyone, but the outcome is the same. Most people exit emotionally before they exit financially. And by the time they sell, they've already lost interest. Which brings us back to the beginning, the invisible phase, the boredom, the silence. The cycle repeats. Here's the takeaway. Most people never learn. Bitcoin's real cycle isn't measured in candles. It's measured in attention. When attention disappears, opportunity forms. When attention explodes, risk builds. The winners aren't the ones who predict tops. They're the ones who understand where they are emotionally. Ask yourself honestly, are you bored right now? Are you skeptical? Are you euphoric? Are you exhausted? That answer matters more than any indicator, because Bitcoin doesn't punish ignorance. It punishes emotional blindness. And the cycle nobody talks about, you're living in it right now.